This week, quite a quiet week actually on the data front. We've got the Reserve Bank minutes tomorrow, and then of course it's a short week with the Easter break commencing really late on Thursday. Minutes tomorrow, the Reserve Bank's been pretty clear that rates are on hold for some time. They've been watching the exchange rate, they've been watching house prices, and they've been watching what's been going on in the economy, and broadly concluding that rates are low, they should be low. They're worried about mining investment slowing down in the second half of this year and next year. They've got rates low to cause housing to recover. That seems to be happening. To see a bit stronger consumer spending, that's happening, and hopefully to lower the currency. And that's happened a little bit, but probably not as much as the Reserve Bank has been hoping. What will be interesting, probably not so much in these minutes, but the next board meeting will be the Reserve Bank's take on the data that we saw last week. Last week we saw job advertising come out, the ANZ Job Ad Series. That's my favourite indicator of the Australian economy. It always tells you what's going to happen to unemployment, and it also tells you what's going to happen to interest rates. And what we've been seeing in that indicator is now job ads have been rising gradually only, but they've been rising for 5 months in a row. So they're telling us that the labour market is actually improving in Australia. There's more jobs being advertised, employers need more staff. That's a good sign for the economy. It's not quite as good a sign for interest rates because it's telling you the next move in interest rates is upward, but the rate of improvement of job ads is telling us probably that we won't see that improvement in job ads for some time, that increase in interest rates for some time, and it will be fairly gradual when it occurs. So ANZ's looking for interest rates to be stable throughout 2014, beginning to increase moderately through 2015. The other indicators we saw last week really backed up that interpretation. So we saw the NAB business survey on Tuesday show that the trend is for improving capacity utilisation, also for an improvement in business conditions. That's been there for a few months now, where businesses are telling you that business conditions are a little bit better. And then of course on Thursday we had the official labour market numbers. They told us that unemployment had fallen from 6.1 to 5.8%. They also told us that around another 18,000 jobs had been created on top of the very big rise in jobs that we saw recorded in February. Now we take both of those numbers with a grain of salt. Those figures are very volatile, but what we can see from the overall take there is that we're starting to see some stronger jobs growth, and we're starting to see unemployment give us some signals that it may be close to peaking, and probably closer to peaking at a lower level than the Reserve Bank or the Treasury has been expecting. They've been looking for a peak around 6.25%. We're actually looking for a peak around 6%. And all the data we saw last week is tending to confirm that picture. So in summary, this week a quiet week. Reserve Bank minutes are focus. Encouraging signs last week on developments in the labour market and the Australian economy, still suggesting interest rates are on hold for some time. The move up, or the next move, we think will be upward, but not until 2015. Thanks, and tune in to us again next week.